Have you been hearing a lot of these statements lately?
Of billions of dollars in new tax credits and rebates. Owners and car buyers a way to stretch their dollars while also saving on fuel and utility costs.
Tesla benefited enormously from tax credits and incentives.
Providing you with a tax credit and rebates if you're buying new energy efficient appliances. Heat pumps, the new heat pumps, they can heat the whole damn house. No, I'm serious, not a joke. Well, if you need a heater and you need to buy one of those heat pumps, you get a tax credit for doing it. And water heaters.
And then also thought if you can become green, clean, save the environment, and also cash in the form of tax credits? Well, the short answer is not really. The long answer is that these credits do exist, but they are so small in relation to the cost of these technologies that they make these super expensive green technologies a little bit less expensive. If you don't want to spend too much time with me diving deep into those credits, here are very quick facts about the ones that I will discuss in the video. First, the home improvement efficiency credit is 30% of the cost, which sounds amazing had it not been for the usual limitations. And in that case, the absolute maximum credit you can take for home improvements is only $1,200. When it comes to qualified personal property, and I'm specifically talking about residential, say you want to change the hot water boiler, the maximum credit for that is $600. And the most interesting part of the video is the clean vehicle tax credit. If we're talking about new cars, the credit, the absolute maximum is $7,500 that you can claim. Obviously, there are certain limitations and requirements that the manufacturer needs to meet, and your AGI limitations as well, that I'll talk in more detail at the end of this video. And when we talk about the used clean vehicles, the credit is either $4,000 or 30% of the purchase price, whichever is lower. There are also limitations, but they're slightly different. Say you're living a good life and you're enjoying your life, but you decide to upgrade your house. And now you have two options. Do you go green or do you go regular? And now you're calculating the budget, so I want to help you with that. So for that example, I'll be using some notes on my phone, but you will see the breakdown on the screen as well. Let's say you decide to go green. For that, the first thing to do is an audit, because the audit will show you exactly what to do, what to change in your house. And I don't know the price that you will have to pay, but I decided to go with $300 because I thought that was reasonable. Upon my research online, I think a level 2 audit is around $300 to $500. I went with the lower price. And the credit, the tax credit for specifically the audit is $150. So in your case, in my hypothetical case, you pay after tax, the net pay is $150. Say upon the audit, you're told to change 4 windows, and it's really hard to find the exact cost of the energy efficient windows because I think it's very customizable and it changes based on the contractor you choose to work with and the types of windows and the house that you have. So I thought that assuming $1,000 per an energy efficient window would be reasonable enough. So let's say you have to change 4. That gives you $4,000 of an expense. And I also included $400 as the labor cost. But honestly, I don't think it would make a huge difference for comparison purposes, because I think the labor cost would probably be the same. Let me know in the comments down below if I'm wrong. So the total cost for the windows plus labor is $4,400, but the tax credit for the total amount of windows, regardless of the amount, the quantity of the windows and the type of the windows that you're switching to, it really doesn't matter. The total tax credit for energy efficient windows is $600. So you will see that the cost after tax credits for windows plus labor would be $3,800. If you compare it to the regular option, I think it's safe to assume that the regular windows are much cheaper. Again, it's kind of hard to find the cost, so I assumed it's around half as expensive. So it's $500 per window times 4 gives you $2,000. Same cost for labor, as I said, $2,400. There is obviously no credit for regular windows, so you would spend $2,400 for the regular windows in my hypothetical scenario. Also say you're told to change 2 doors to energy efficient doors, and that I was actually able to find on Home Depot. Please note this video is not sponsored by any products. I was just looking online to see the pricing, and I was able to find, I think, what is considered to be an energy efficient door. I'm not 100% sure, so you have to make sure, you have to speak with the manufacturer or the seller to make sure that those doors are specifically energy efficient. But in my case, I found one for $246, and if you multiply by 2, let's say you have to change 2 and also add the labor. I decided to put $50 for the doors. I don't know, and it really wouldn't matter too much, I would say, but the total cost with the labor for 2 doors in my hypothetical scenario would be $542. And for the doors, the tax credit is $500, meaning that regardless of the amount of doors, whether you have to change 5 doors, 10 doors, 1 door, the maximum credit is $500. So after credit for the green doors, you would spend only $42. So in that case, actually, if you compare it to the regular case scenario, in which case I was able to find the cheapest door as well that was more or less comparable in style to the green one for $169. But obviously there is no credit. You also have to pay for labor, so you're comparing 388 to 42. So doors would actually in this specific scenario work well with the tax credits, but it doesn't always work that way. It depends on how many doors you need to change. So up to this point, you've done the audit, you've changed the windows, and you've changed the doors. And let's compare the cost, green versus regular. For green, the total cost before credits is $5,242. Remember, the credit is 30% of the cost, of the total cost. So 30% of that is $1,573. But also remember how I told you there are limitations on every single item. So you can't claim more than $150 for the audit, you can't claim more than $600 for the windows, and you can't claim more than $500 for the doors. So the total gives you $1,250. That's the limitation based on every single item. But remember, I also told you about the absolute maximum credit that you can claim is $1,200. So that is the lowest amount of the 3 options that we've calculated. So $1,200 is what you're able to claim on your tax return. Obviously, if you go with the regular option, there are no credits, but also regular windows, doors are cheaper, and there is no audit to do. And so you would spend $2,788 in that scenario. When it comes to personal green efficiency property, and I specifically talk about the residential property, the maximum credit allowable is $600. So let's say you also decide to switch your hot water boiler and make it green. Again, I was able to find something online on Home Depot, and I don't know whether it's exactly that, but it seems like it is energy efficient. So let's say for my example, I choose that one for $2,422, and the maximum credit again is $600. So the net pay would be $1,822. And if you go with the regular hot water boiler, again, I was trying to find something online so that I could compare the budgets. That would give me around $1,720. Obviously, no credit for regular hot water boilers. To summarize all the costs, the grand total cash that you will spend after tax credits already for the green option is $5,864 versus $4,508, which gives you a difference of $1,300. When it comes to the clean vehicle tax credits, there is a difference between new and used. So let's talk about the new vehicles. The absolute maximum credit is $7,500, as I've mentioned already, but the manufacturer needs to meet 2 requirements. First is the critical materials. If the manufacturer meets that test, you get $3,750, and also assembly and manufacturing. If the manufacturer meets that second test, you get additional $3,750. Obviously, you have to check with the manufacturer. But in addition to that, the credit also depends on the price of the car. So the price of the car cannot be higher than what is considered to be non-luxurious. And for new vehicles, you will see them here on the screen. And in addition to those limitations, wait for it, you have obviously the income limitations, the AGI. And AGI limitations are also listed here on the screen. If you make more than what is written here in this current taxable year or previous year, then you're not going to get the credit. When it comes to used vehicles, the credit is $4,000 or 30% of the purchase price, whichever is lower. The requirements are very similar for the new car as well, except that the limitations are slightly different. Obviously, the maximum price of the used car is lower, and also AGI, your income limitations, are also lower. It's understandably frustrating to calculate this credit and see whether a particular manufacturer, a model, and your AGI levels would meet the requirements for the new or used vehicle tax credit. So the IRS actually provides a really good resource, and I will put the link down in the description of the video. It's fueleconomy.gov, a governmental website where you can enter all your data, your income, AGI, your filing status, the manufacturer and the model of the car, and it will give the calculation of the credit for you. So it's much easier that way. In addition to that IRS resource, most manufacturers that manufacture those clean vehicles, whether it's electric, hydrogen, or a hybrid, whatever, most of them provide on their website whether the specific car and the model meets the requirements and would give you a particular credit and calculate the amount of credit as well. However, in that case, please keep in mind that the manufacturers will assume that you meet your AGI limitations. There is one really good aspect of the vehicle tax credit which I was surprised to learn about, and that is the transferability option, which basically means that you can transfer this credit so that you can use it at the time of purchasing the car. You don't have to buy the car for the full amount, then wait until you prepare your taxes and claim this credit later. No, you can actually use this credit at the time of purchasing the car so that you can reduce the purchase price of the car with that tax credit. My name is Lilia, I'm a New York licensed CPA, and on this channel my goal is to empower you by uncovering the mysteries of US income tax and broadening your perspectives. While this video and the channel overall are informational, they are by no means a complete tax guide and should never be taken as professional advice. Also, these videos are not eligible for CPE credits. I hope you found this information useful, and I hope to see you in the next video.